Hi friends, today we are going to discuss about functions of accounting. The first functions of accounting is recording that we have already discussed later in the one video. Recording is nothing but journal entries. Journal entries are like recording of transactions of financial nature in terms of money that we called as recording. So here we are going to discuss about classifying. Classifying is systematic analysis of recorded data. So we have already recorded the data. The data is with us, that is nothing but journal entries. What we are doing with that entries? We are systematic analysis of recorded data. Those entries we are analyzing systematically, that is nothing but classification. Okay. Bring transactions or entries of similar nature into one place. Okay. The similar nature transactions we will be bringing to one place called classification. The work classification is done in the books known as ledger. So where we are doing all these classifications, we are doing the books called ledger. In ledger only we are doing this classification. So we are recording in journal and we are classifying in ledger. Okay. In ledger, financial transactions of similar nature are brought under one page called account. Okay. In ledger, financial transactions of similar nature are brought under one page called account. Okay, we have different types of accounts in ledger. So similar nature transactions we will bring into one page called account. Okay, so we have one example here. Basically what we are going to do here, we will take 2-3 transactions. So we will record those transactions into journal and we will classify through ledger. This is our objective in this video. Okay. Here example is on 1st May 2024, Mr. Juan started a coffee shop business in India and Juan invested Rs 50,000. Okay, rupees 50,000 he has invested into his coffee shop business. And we have some transactions also. We are not taking all the transactions which is happened in that business. We are taking 2-3 transactions. Our objective is to understand what is recording and what is classifying. In May 1st he has started with the business, with rupees 50,000. May 2nd what happened? Cash deposited into bank rupees 30,000. May 2nd, the same day what happened? Goods purchased for cash 8,000 at 25% trade discount. And May 3rd what happened? Goods sold for cash Rs 2,000. So these are the 4 transactions here. On 1st May he has started one business and he invested rupees 50,000. And the second day cash deposited into bank 30,000 and the same day goods purchased for cash rupees 8,000 at 25% trade discount. And May 3rd what happened? Goods sold for cash rupees 2,000. So first we will do the journalizing for all these 4 entries, then we will go to ledger. That is what we are doing in this video. So on 1st May what happened? He has invested 50,000 rupees. So journal entry how it will be? On the format for the journal is date, particular, ledger folio number, debit, credit. Okay. May 1st what happened? He has invested rupees 50,000. So cash come to bank. So cash account debited 50,000. this we have already discussed in one another video, how we are posting journal entries, on what basis, what are the rules, golden rules of accounts, that you can refer in one another video. And cash coming to bank, cash is a real account, debit what comes in, credit what goes out. So cash is 50,000 is coming to bank, coming to our business. So cash account debited to capital account 50,000. So the narration will be being business started by cash. Okay. On May 2nd, what was the transaction? Cash deposited into bank rupees 30,000. Okay. Cash is going from a business to bank. So debit what comes in, credit what goes out. So bank we are debiting here. Bank account debited to cash account credited, being cash deposited. Okay. Now May 2nd, the same day which transaction happened, goods purchased for cash rupees 8,000 at 25% trade discount. So purchase account debited, so 25% of 8,000 is nothing but 6,000. So purchase account debited 6,000 to cash account. Cash is going from us, going from business 6,000. B, goods purchased for cash at 25% trade discount. So these are the three journal entries for first three transactions. Now we have one more transaction. Goods sold for cash rupees 2,000. So what will be the journal entry? Goods sold for cash rupees 2,000. So cash is coming to business. We are actually, what we are doing here, we are selling our goods to customer. So customer is paying to us. So cash account debited to sales account. So May 3rd, cash account debited to sales account. This is our last journal entry. Being goods sold for cash 2,000 rupees. Okay. Now we have recorded all those transactions through journals. Now we are going to classify through ledgers. Only we have 4 transactions. We will be preparing ledger for all those 4 transactions. Okay. First we will take a cash account. So we need to take all cash involved transactions into one book called ledger. Here we have a cash account ledger we are going to prepare. Okay. We need to check what are all those cash related transactions. Okay, cash related transactions we will be checking here. Before that, what is the format for ledger? That also we will analyze here. Debit one side and credit another side. Date, particular, journal folio. So in journalizing it was ledger folio. Here in ledger it will be journal folio. And amount. Then in credit side, date, particular, journal folio, amount. The same we are including here. Okay. In May 1st, one cash related transaction is there. What is the cash related transaction in May 1st? Cash account debited to capital account 50,000. So cash here we are debiting. Okay, this role is very important. Okay, cash account here we are debiting. So in ledger we need to come to the debit side of the ledger and we need to enter to capital account 50,000. Okay, here the fully journal entry is cash account debited to capital account 50,000. So cash account here debiting, so we need to go to the debit side of the ledger and we need to write to capital account 50,000. Okay, now next cash related transaction here, May 2nd, bank account debited to capital account credited. So here to cash account credited. So we need, what we need to do, we need to go to, here cash is crediting, so we need to go to credit side of the ledger and we need to write by bank account 30,000. Okay, and next May 2nd, the same day, purchase account debited to cash account 6,000. So cash here we are crediting, so we need to go to credit side of ledger and we need to write by purchase account 6,000. Okay, is there any cash related transaction? Yes, here we have one more cash related transaction. In May 3rd, cash account debited to sales account 2,000. So cash here we are debiting, so we need to go to debit side of ledger. We need to go to debit side of ledger and we need to write to sales account 2,000. And now we have 4 transactions cash related. All 4 transactions we have posted into ledger. Now we need to balance this. How we will balance? Here we are having 30,000 plus 6,000, 36,000. Here we have 50,000 plus 2,000, 52,000. Here 36, 52. So the difference is 16,000. That we will be posting an entry in May 31st. The last day of the month we will post an entry by balance carry down the difference between 52,000 and 36,000, 16,000. And in the next month we will pass an entry in the debit side June 1st to balance brought down 16,000. So this is how we are preparing ledger for a cash account. Okay, so we are not having only one account, we are having multiple account involved in these transactions. So cash account we have already prepared. Now we are going to capital account. So capital involved transaction is only one. So cash account debited to capital account, here we are crediting, so we need to go to credit side of the capital account. We need to go to the credit side of capital account and we need to write by cash account 50,000. Okay, now we need to balance this. So here only in credit side 50,000 and for balancing we will be writing to balance carry down 50,000 in debit side, and on which day? May 31st. And in June 1st we will pass an entry in credit side by balance brought down 50,000. Okay, so this is the ledger for capital account. Now we have bank account. The bank account involved transaction is only one. Bank account debited 30,000 to cash account credited. So bank here we are debiting, so we need to go to debit side of bank account. We need to go to debit side of bank account and we need to write we need to post this entry to cash account 30,000, and we are having only one transactions here, so we need to balance here. On May 31st we will post an entry by balance carry down 30,000, and in June 1st to balance brought down 30,000. Okay, now we have already prepared the ledger for cash account and bank account, capital account. Now we have purchase account. So here we have purchase account. Purchase account involved transaction. Purchase account debit on May 2nd. Purchase account debited 6,000 to cash account credited 6,000. So here debiting, purchase account we are debiting. So we need to go to debit side of purchase account ledger. We need to go to debit side of purchase account ledger. Here debit side of purchase account ledger to cash account 6,000, and we have only one transactions among all these four transactions related to purchase account. And May 1st 31st we are balancing by balance carry down 6,000, and in June 1 to balance brought down 6,000. So this is the overall creation of this purchase account ledger. Now we have one more. Cash account we have already written. Now we have a sales account. On May 3rd, the journal entry is cash account debited to sales account. Cash account journal ledger we have already prepared. Now in cash account sales account ledger. So cash account debited to sales account. Sales account we are crediting here. So we need to go to credit side of sales account. We need to go to credit side of sales account by cash account 2,000 on May 3rd. For balancing this May 31st we will post an entry to balance carry down 2,000, and June 1st we will have one more entry by balance brought down 2,000. Okay, so what we have done in this video, we have just taken the definition of classifying, and this is the second function of accounting, and we have taken one example involving 4 transactions. We prepared the journal entry and we posted all those entry into ledger. I hope you understand all the concept and whatever we have discussed here. If you like this video, please like to this video and subscribe our channel. Thank you.